As you know, GFLEC is not a museum. We are the only founding member which are not museum, but what is our role is we bring the research to the museum. And I'm extremely happy to say that we have now accompanied the meeting of the museums each year with this financial education summit. So we had one last year in Vienna, and we are extremely happy to have one this year in Brussels. What I'm going to try to talk to you today is about millennials and fintech. This is actually a very hard topic to study, because if you want to focus on millennials, which is just a small group of people in the population, then you sort of need to do just a specific surveys on millennials. And of course, there are very few data sets which have information about fintech. So what I'm going to really tell you is some preliminary work that we have been doing and some descriptive statistics, really, about these topics, mostly because we spent a lot of time first to collect the data. And the big message I want to say and document with this work is what Sylvia just said, which is it is incredibly important to think of financial education in the digital era. With the digital technology, and with technology now, we are much more able to make financial decisions. In fact, we can make it with the click of a button. And because of that, the necessity of financial education becomes even stronger. So let me actually start by showing you actually a slide which I have done almost all the time. And of course, if I get the clicker to work, it would be great. But unfortunately, the slides do not move ahead. Here we go. So this is actually a slide I show all the time. And it basically shows that we need, in a sense, to think about financial education because we see changes not just kind of in the financial markets or in the labor markets, but for example, for young people, the rising cost of education is certainly very important. The rise of technology is certainly very important. So in other words, the world is changing around us, and we need to keep up with that change. I want to warn you that a lot of my statistics are really about the US. And this is why you are going to see, and we are going to mention again, the cost of education. You know, millennials in the US are very much affected by the fact that if they go to college, they are going to basically start their economic life in debt. And the average debt for a college graduate in the US is more than $30,000. So young people start their economic life in debt. And I just want to start actually with these two considerations. I want to tell you two things about the millennials, which in my definition are people 18 to 34 or 18 to 38, depending on which data we are going to look at. So, you know, we need to study the millennials because these generations is going to be the one representing the labor force just in a few years. By 2025, 3 out of 4 workers globally will be millennials. So they are like the next most important generation. I see all of these millennials in the audience as well. So, you know, in a sense, very much you are our future. There are some features about the millennial. Again, my focus is very much in the US, but they are very diverse, they are highly educated, and they are a big user of technology. So, you know, that's why if we talk about fintech, in a sense, we have to think about the millennials because they are the one which basically got used to use technology very early on. In the US, they are also the generation that is faced with this extremely high rising cost of education. The first thing I wanted to tell you is like these millennials, in a sense, have a few characteristics that are important. One is that their level of financial literacy is very low. So this is actually something important to know because, they are the one facing all of these challenges, rising cost of education. If they go to college, many of them will have to take up large amount of debt. They face much more complex financial markets. They are in charge of their own financial security after retirement, and so on. When we ask these very simple questions, and with Olivia Mitchell, I had designed this very simple question to measure financial literacy. These are called the Big Three. They have become named the Big Three because they have been asked in many, many countries around the world, and they sort of measure the ABC of finance. Can you do a 2% calculation? Do you know the effect of inflation? Do you know about risk diversification? Let me show you that in the US, if you look at the millennials, well, actually, not even 25% of those millennials can answer correctly these three questions. So these young people are facing, in a sense, many consequential financial decisions, almost knowing anything about personal finance, not even the ABC of personal finance. When we look at the finances of those millennials, and this is actually important to establish early, they are already very active in a lot of these, if you look at both of their asset side and the liability side in their balance sheet. But the way I would describe this generation is they are highly leveraged. In other words, almost every asset they have borrowed against. Starting with their checking account. Most of the millennials are banked, but actually they overdraw the checking account, and quite often, 26% of millennials overdraw the checking account. If they have a house, they very likely have a mortgage. They contribute to the retirement account, but even though they are only 30, they are already borrowing against those accounts. In the US, you can actually take loans, you can take hardship withdrawal, or you can take a loan against your retirement account. So like 23%, almost 1 in 5 more than 1 in 5 has already withdrawn from their retirement account. They have a college degree, but they have student loan, so they are also leveraged on their human capital. And if you will look, and I'm going to show you in a moment, at their borrowing behavior, they actually tend to borrow really high cost. So the personal finances of those millennials are, in a sense, not showing a very necessarily wise behavior, and certainly they carry a lot of debt. So just to give you some indication of financial distress, millennials, in fact, 38% basically use high-cost method of borrowings. In the US, you can borrow against your future checks. So these are called payday loans. You can borrow, for example, using pawn shop, rent-to-owns, and so on. And when we look at all of these high-cost methods of borrowing, which are outside the regular banking system, as many as 38% of millennials did that. This is actually a problem in a sense that these young people are already borrowing outside of the banking system, basically using instruments that charge 400% interest rate on average. So these are very, in a sense, strong sign of financial distress, and these are young people. Why do they do so? Well, many of them have a student loan, and many of them are concerned about paying off the student loan. And when we look at a measure, this is a question we have designed to measure financial fragility. So we asked people whether they would be able to come up with $2,000 in 30 days if a shock happened. Actually, most of the millennials are financially fragile. So they couldn't come up with $2,000 in 30 days if a shock to them happened. So why did I set up the stage for them? Just because I just want to tell you about the study that we did looking at the use of technology. So, this young generation, these millennials, which are so important, on the one hand, face personal finance decisions that are featuring certainly financial fragility, recurring method of borrowing, and so on. So how does the use of technology, how does fintech help them in making financial decisions? And by the way, these are the generation which is going to use fintech for almost everything. So if you are in the US, and you go to lunch with somebody, they are going to pay with their watch. They don't even know what cash is, and so on. So does technology help them? To answer this question, and I only have descriptive statistics to show you today, we actually had to do our own survey as well. So I'm going to tell you about a report that we wrote recently where we collected data on the millennial and the use of technology, mostly method of payments, which is actually the most common use of technology among millennials. And then I'm going to tell you about our recent report using data in 2018 that we did due to a collaboration with TIA Institute, where we also oversampled the millennials and now are looking at several other use of technology in their personal finances. So let me actually start with the first report. What we did here, we were able to use a big data set. It's called the National Financial Capability Survey, where we actually have a large sample of the millennials, and we are mostly focused on mobile payment. And this is because the mobile payment is the growing and most important technology use, not just in the US, but around the world. So the fact that we can make payments now using technology has very much changed the use of bank, has very much changed how, in a sense, we also, can our financial decision, and actually how we make this payment has become very technologically driven. As I mentioned, it's hard to study the millennials because this is, in a sense, a narrow age group in the population. But if we use the National Financial Capability Study, this is a survey done by the regulator in the US, but we have been the academic advisor, and we have been able to add the questions looking at basically mobile payment in the newest survey, which is in 2015. But we were so surprised by the finding that we complemented that survey with our own survey. This is called the GFLAC Mobile Payment Survey. We did this on Amazon Turk, so you can actually collect data via Amazon. Amazon does everything. And we actually have a sample of millennial of 2,000 observation. We have almost 8,000 observation of millennial in the National Financial Capability Study. So, we have actually a large sample to study millennials. The question I'm going to use to basically measure method of payment is whether people are basically using their mobile phone to pay for a product of service, and this is like by waving, tapping your mobile phone, scanning a barcode or QR. So we are going to define a technology user if people, in a sense, use this method of payment for when they buy something, okay? So our user is that they frequently or sometime use their basically phone to make payment. And we find, and this is again, the millennials are the one most disproportionately using technology to make payment. So 39% of millennial in the survey and 49 in our GFLAC survey are actually using their phone to make payment. Making payment with the phone is actually really important if you think about this. And if you think of our method of payment, so we went to using cash to using a credit card, right? And already that method, using a credit card, in a sense that takes away like the cash or the pain of opening your wallet, right? Even the credit card itself was actually quite a change. And a lot of research has been done whether, if you use a credit card, are you spending more? Now think about, your phone. This is an instrument you really love, right? And making payment with the phone now is almost no pain, right? You don't even see, in a sense, kind of the payment, like everything happened with your own adored phone. So who use, among the millennials, who are the people who are using the mobile payment? Normally they are the higher income, even though, in our survey we also see that they are disproportionately, for example, African American. But, these are the people which are busier, have a job. So, it is the typical characteristic that we expect would probably use this mobile payment. But one of the things we also start seeing is that the people who are also using the mobile payment certainly are much more likely to have asset, but they are also much more likely to have debt, okay? And this is precursors of what I'm going to show next, which is that, when we look at, these mobile payments, and if we look at the simplest, in a sense, transaction that you can make, or at the simplest personal finance that I've mentioned earlier, we are already seeing that the people, for example, who use mobile payment are a lot more likely to overdraw from their checking account, okay? So, like, people who use, in a sense, this mobile payment are not necessarily the one who are doing their personal finance better. And in fact, if I were to continue to show you this, what you actually see is that, the people who have mobile payment are a lot less likely to use credit card wisely. They are a lot more likely to use alternative financial services, okay? So I'm actually going to show you this in a moment in a regression. But the other things I wanted to show you is that the people who use mobile payment are disproportionately those with low financial literacy, as measured by the 3 questions. Okay? So the user actually of this mobile payment, even though they are higher income and higher education, they actually are much less financially literate than the non-user. Okay? And what we also see here, and this is also shown, this is also true if you control for other characteristics. So it seems that the people who are more likely to use the phone are the one, who are actually not literate, and so are the one potentially less equipped to use that technology well for their personal finances. And unfortunately, it gets worse, which is that, what are the personal finances of the people who use the mobile payment? If we look at several characteristics of personal finances, for example, if we look at people who spend more than they earn and than their income, who overdraw their checking account. And I'm actually using overdrawing the checking account because it's the simplest, in a sense, operation that you can do. Managing a checking account should be the simplest financial decision. Yet, if we look at people who use mobile payment, they are actually a lot more likely to overdraw their checking account. They are a lot more likely to use alternative financial services. So if we look at several financial decisions, those who use mobile payment are less wise in their personal finances. And this is true both using the very large survey, the National Financial Capability, and using our own survey. Okay? This is, by the way, not showing causality. It's not because you use your phone that you are not wise. Is that the people who use the phone are also those who are not very wise in their personal finances. And one perhaps could argue that because you don't see the payment, because you just put your watch over the counter, you actually are not able potentially to keep track well of all of your expenses. So that easiness of pay, is not really helping you. And what we see is not helping both on the asset side and on the liability side. The other thing I wanted to show you is that if you are financially literate, though, you are much less likely to have those type of behavior. Not only, but the user, so the mobile payment user who are financially literate are actually less likely to engage in this behavior. Okay? So 2 things about this regression, and if you are averse to regression, let me actually show you just with the sign here, which is that unfortunately, the mobile payment user, people who use technology, tend to be the one which are less financially literate. So like the technology is very much attracting people who are not very savvy in their knowledge. And when we look at the behavior, we see that the one who use technology, that's why you see the sign, are much more likely to engage in poor financial behavior. But if you are financially literate, actually you have almost a tool. You are better able to deal with your decision, and you are also better able to make payment, in a sense, with the technology that is not conducive to poor financial decision. Okay, so the big point I would like to show here is that technology, in a sense alone, might not help in financial decision making. You very much need to complement the technology with financial literacy. In fact, financial literacy is even more important in the digital age. Let me now show you the newest report that we have done. We have been able to do so because since 2017, we have actually partnered with the TIA Institute. This is actually the research branch of the TIA, which is a big mutual fund in the US, actually a pension fund, mostly targeted to the academics. So, for example, they are the pension provider of most of the education industry. And since 2007, we actually I've worked with them, and each year we are collecting data about knowledge of personal finance. So this time we are not actually just, we don't have just 3 questions to measure financial literacy, but as many as 28 questions to measure basically the knowledge of personal finance as it relates to the day-to-day financial decision that people are making. In 2017, in addition to doing this survey, we oversampled a specific population. In 2017, we oversampled the Hispanics, which are a very important group of the population in the US. And in 2018, this year, we oversampled the millennials, and we have a lot of questions about fintech. Let me show you what we do here. So first of all, this is mostly a survey about knowledge of personal finance, 28 questions divided in 8 categories. So it's a very, very, in a sense, granular analysis of the knowledge of personal finance. And this is why we call it the PFIN index. And just to show you and set the stage yet again, millennials are basically the people who know the least. And they know the least because they are young. But, in the US, in a sense, even the baby boomers that are close to retirement, when we look at the financial literacy measured by this 28 question, most of the population doesn't really know personal finance, even though they are asked to make many of these financial decisions. The millennial know the least, and of course, because they are young, they don't have experience, and by the way, only 17 states in the US require personal finance in college or in high school. So many of the Americans, even though they live in the most developed financial markets, are not exposed to financial literacy in high school. When we look at fintech, now we have actually 8 measures of fintech. which we divided into two groups, transactional activities and informational activities. So like we have asked people whether they deposit check in a bank account using technology, whether they send or receive money from friends via technology. The third one is our mobile payment, and whether they pay bills using technology. And then there are all of these informational activities, whether they track the amount they spend, they compare prices, they check their credit score, they get personalized financial advice, all using technology. Okay? And actually, I wanted to show you, I'm going to only look at the mobile payment yet again, and I'm also going to look at just one informational technology. With the idea is now, people are using technology to keep track of their spending, so they should be able to do better, right? This is the type of technology that should help people in their personal finances. Okay? And here is how much millennials use all of those transactional activity or the informational activity. Okay? So just to show you, millennials use a lot technology to pay bills. The mobile payments is actually their lowest use of technology. Now, they use technology a lot in many of the other things they do. Same thing in terms of the informational. They use technology a lot to comparison shop, and they also do it quite a bit to track spending. So certainly the use of technology, yet again, is very common among the millennials. So is this technology helping them in their personal finance? Let me show you again. And by the way, we weren't able to aggregate all of those and say, let's study all of them. We actually have to study them one by one, because if you look at the characteristics of the people who use all of these different, in a sense, technology, they are quite different. And so we couldn't really aggregate them in an index. So far, we are actually studying each of them separately because they are quite separate. So the people who use mobile payment, and if you look at them versus pay the bills, some of them are different. And so, we want to first study them in isolation. Okay? So what you see here is the same finding we had before, right? If you use the mobile payment, you are much more likely to overdraw from their checking account. So even if we take the simplest financial decision, okay, people who basically use technology are much less savvy in their financial decision-making. And this is actually true, unfortunately, even if they keep track of spending. So they are still using a technology which should help them in their spending, but in fact, they are more likely to overdraw their checking account. Perhaps providing yet again evidence that the people who use technology are disproportionately those who are not savvy in their financial decision-making. Again, this is a correlation. I don't mean to say that, because you use technology, you make worse financial decisions. But these two behaviors are very strongly correlated. Okay? But yet again, there is this positive and important effect of financial literacy. People who are financially literate, and here is actually financial literacy measured by these 28 questions. And so I can also measure whether you know a lot, or you know how many questions you can answer. And the more financially literate you are, the less you are likely to overdraw your checking account if you are a mobile payment user. Okay? So yet again, when we look, for example, just at the mobile payment, we see all over the previous result. In other words, you are not savvy in your financial decision, but if you have financial literacy, you are much less likely to overdraw your checking account, even if you use technology to do that. The same things about the tracking spending. Here, like the estimates are not statistically significant. So, if you track spending using mobile technology, you are not more likely to overdraw your checking account. But actually, having higher financial literacy make you much less likely to overdraw your checking account. In other words, just to conclude, what we find here is all over again the same finding, that even if you look at other measure of technology, in a sense, you are still more likely to mismanage your personal finances, but that financial literacy actually help you in using technology better. I'm very happy to tell you that we are going next week to the Singapore FinTech Festival. Yay! Which is like full of these FinTech people. So I think there are like 500 FinTech people. And so we actually are going to have a panel, which we have this FinTech guru. By the way, what do we know about FinTech? We only did 2 research, but anyway. But I'm going there with my board member, Diana Crossen and Harris Morenberg, and we are actually presenting our result on our result of this research at the FinTech Festival, and kind of telling people that if they want FinTech to save the world, I think they have to put financial education in that FinTech stuff. And this is really, in a sense, the main message of this presentation, which is FinTech is not a substitute for financial literacy, and financial education is even more important in the digital age. And believe it or not, I have 52 seconds available.
Anna, thank you very much. I think we have a few minutes for some questions, and I'm sure there are some questions in the audience, because this is actually a very enlightening study that should serve as a warning for everybody involved in mobile payments, also here in Brussels, also the EBF. My question would be, if you need to make FinTech financial literacy part of this FinTech search, where do you need to put it? Do you need to put people back into the classrooms, or do you need to put it into the FinTech tools?
I think both. I mean, I think this study shows yet again, we need to equip the young to live in this new world, right? I mean, a young person today has been born with technology. Everybody has a phone, everybody is using technology. So even more than before, we need financial literacy in the school. I think that's the best way in which you can convey financial literacy. But the beauty of FinTech is that it's available, in a sense, and it allows us to do a lot more financial education. So I really also think we need to combine that technology with financial education so that people are really used to that. So perhaps there need to be a warning, when they try to make payments, or where they use their checking account, which is, have you checked that there is money in your, in the saving account? As simple as that. Because in fact, many of these is assume that people are financially literate. I mean, I just wanted to tell you that there is a commercial in the US, which is literally says, push button, get mortgage. And this is called Rocket Mortgage. And I really feel like, oh, no. Let's not push button and get mortgage. It's like, push button, get information, get a lot of questions about your mortgage, not get mortgage, right? We need to have a lot of barriers before people get the mortgage.
And at the same time, you have a lot of millennials active in startup companies, also in the financial technology space, and one of them is here who will be speaking this afternoon, and I'm sure there's some interesting insights on that as well. I'm looking around for questions. I think we can have some questions here.
Hello, Alexandra Major, Austrian Central Bank. Thank you very much for your very inspiring presentation. I'm just wondering whether you found any evidence as to the way the information is actually processed, whether that impacts on the way people can deal well with their personal finances or not. The reason why I'm asking, I know that some time ago the LSE did some research on actually processing a financial education, and they compare, and they're kind of compared processing in the old ways, like in the analogous way on paper, versus having only your digital statements. So I'd be interested whether you have any take on that. Thank you.
Yeah. So actually this is a great segue in the next presentation, because Lucas, will tell you a lot about kind of financial education, method of learning and things like that. But, we have done quite a bit of work, for example, in trying to see how people can make better financial decisions, and how can you provide education or information. So I think that there is quite a bit of work showing, do you, for example, present a credit card statement in a certain way? Where do you put the information? What do you present, and so on? And all of these things matter. And I think it matters mostly because people do not know, in a sense. They don't have the ABC of financial literacy. So, everything matters. And contrary to a lot of what people argue is, it seems like, if I give a nudge, it really matters. It really matters because people really have no clue, of many of these things. And I think it's an important reminder. People cannot make a 2% calculations. With the millennials, actually, we did a project trying to teach them these principles. And we did this via videos, via a narrative, right? And kind of, trying to see how, in which way do they understand more. And then we had even a visual tool to understand risk diversification. So what we found is that videos are very important. One is because millennials are very used, in a sense, to videos, are very used to get this information in this way. And also, for certain concepts, they are so sophisticated, in a sense that they are so hard to grasp that we need even to go beyond, in a sense, this explanation, and we need to give them tools to understand it. So we did actually this, we developed a tool to make people understand risk diversification. So the fact that if you put more asset in a portfolio, in a sense, you are restricting the range, in a sense of the risk you are taking. And that's actually quite effective for the millennials, because also they are used to get information that way. So, there is quite a bit of research going on in that. Our research as well shows that, providing information, in a way in which millennials are used to is quite effective. So, there is, I think, a lot of ways in which we can provide the information. It doesn't have to be in a classroom. Now we can provide it, literally like in videos, small videos, or in tools where, by using the tool, you kind of see what the implication of your decision can be, or you can see visually what happens if you combine, for example, different stocks, or what happens if you don't pay your credit card, right? So there are lots of things that we can do to help people make financial decisions.
One more question. Here on the front row, yeah.
Thank you for a most interesting presentation, Professor Lusardi. My name is Alexandra Maniati. I work with the European Banking Federation, and I'm responsible for cybersecurity. So one of our high priorities in cybersecurity is raising awareness, both among bank employees and bank customers. And I was wondering, seeing your research moving to the digital finance world, whether it would be worth, or you would consider including in your research a study of online behavior, cybersecurity habits. Do people know in their digital finances how to protect themselves from online fraud, how to protect their credentials, how to create secure passwords and store them safely? Would that be a part of the new financial behavior?
The answer is yes. Actually, I'm so glad you have mentioned this. And, this is, again, when we talk about fintech, we are only scratching the surface. And I actually think that the cybersecurity is a huge deal. It's such a huge deal, by the way, that we are changing the financial literacy question in the PISA data. So the 2021 PISA, if you are not familiar with PISA, is the Program for International Student Assessment. It measures financial literacy among 15 years old. So we are already at the third wave. And so, the 2018 is already in the field, but for the 2021, we are changing those questions to incorporate fintech and incorporate how young people are aware, are they knowledgeable about all of the security that needs to be put in place. And, we don't have those questions here for the millennials, but I think, we should, because that's very, very important, and it's very consequential. And there is not, in a sense, a month that goes by without hearing about, problems with, cyber attacks or problems with kind of that type of behavior. So, it is a very, very important field that we hope we can expand, and we have already done so in the PISA data, just to show how important your point really is.
The screen is flashing red here, but one more question by Sylvia.
Annamaria, thank you for this enlightening data, and thank you very much, Annamaria, for this enlightening data. And I just want to know your opinion. If fintech is putting all these financial operations at the hand, so easy at the hand of so many people, there's a big temptation to put along with the operations concepts for financial education. But we know that when financial education is linked to a brand, to the brand of the provider of this financial service, then it loses some credibility. Mm-hmm. So where, apart from school, should we place this kind of information so it could be really useful for the user?
Yeah, no, it's definitely complex, right? Because, sometimes the financial education doesn't come together with the, with the fintech, right? There isn't a question, which type of user are you? And then I direct you in different places and so on. I really do think that we do need, like you say, a very a credible, a rigorous source of information. So I'm going to use this to actually feature the work that we are doing in Italy. And actually following the example of 70 countries now, and all under the guidance of the OECD guidelines, more than 70 countries have done a national strategy for financial literacy. Part of that national strategy is often a website where people can go and obtain information. And normally this is, a rigorous, independent website. So we have built one for Italy. It's called Quello che conta, which means in English, what matters. And almost every country has such website. Everybody has followed the example, for example, of New Zealand, which built one of the most successful websites. It's called Sorted. I know Canada as well, via their financial authorities, is building, in a sense, a website where people can go and obtain kind of information. This study sort of suggests that we also need to target a certain group of the population, and those websites that we have built should also be, very enriched so that they can provide much more targeted information. So if you are millennials, of course, you are going to be much more likely to use that information, but then we needed to make it very attractive, very interactive. And so that would be, I think, another source of information. And again, we have to also make sure that people go there, right? And so we need to provide that information as well. Having said that, let me repeat, though, yet again, that I really do think that, the financial education should also be in the school, because it's much easier for people to use, technology well, to also access information when they have that knowledge. And last but not least, I'm hoping as GFLEC that this information is provided in the museums, of course. Museums are a fantastic place where you can get the information. I know that Flip, which provides information about the young people, would be an ideal place for this information, and I know you are already doing it. But I think, the museum as well, as they think of how can we help people, in a sense, be knowledgeable about their finance, they should, for example, have a session about all the cybersecurity. They should have a session about, use of technology, but how can you use it wisely, and so on. So there is really an important role for everybody here, including for the museum, which are ideal places for people to go and learn. Thank you very much.
Anna, thank you very much. Any further questions via email or in the coffee break personally to Anna? We'll resume at 11 o'clock with Professor Menkov. Thank you.